Hey, Jason here. Today's video, I'm going to answer the question, should you invest in Gratomic? Hopefully I'm pronouncing that right for Jeff D, who requested this video on YouTube. Before I get to that though, I'd let you know you can get the series as a podcast anywhere in the world for free on all major podcasting platforms. Stitcher, Anchor, SoundCloud, Spotify, iTunes, and more. You can get this as part of the I Love Value Investing podcast anywhere in the world for free. And if you like this content and other content, make sure to subscribe and hit the notification bell if you're listening on YouTube, so you can so you're notified every time we release a new video. I'm releasing new videos all the time. Okay, before I get to today's video, I have to do this disclaimer because again, I don't want to. Every time I forget to do it, I get nasty comments on YouTube. So this analysis is based on my preliminary analysis checklist. I do this for every stock I look at. I do this to get rid of terrible companies faster, so I can spend more time looking at great potential stocks. If stuff does not reach my criteria, that means I don't look at it further. I don't care about the story. I don't care about its future potential. I don't care about any big contracts it's recently signed. I don't care about any of that unless the company meets my minimum thresholds for what I require from a business, which is typically, for most companies I invest in, great operating businesses, huge profits and cash flows, competitive advantages, stuff like that. So these are solid businesses. I'm saying this because, again, we're going to talk about another company today that is speculative. But that is my perspective. I don't care about the story. I don't care about what it's doing in the future. It has to, for me to consider investing in it for the portfolios I manage, has to be a good company now. Anything positive in the future is icing on the cake, but I don't even get to that part if it doesn't meet the minimum criteria now. So this is for informational purposes only. This is to help you learn how to spot great potential investments faster and how to spot potential red flags in companies to avoid them faster. This is built on my 15 years of experience, looking at thousands of companies, thousands, maybe tens of thousands of companies all over the world over the last 15 years of my career. Why should you listen to anything I say? In the first 9 years of my career, I've produced average investment returns in the portfolios I manage of 23.5% on average per year, every year for the 9 years, which puts me right behind Warren Buffett, who produced 24.2% average returns in the first 9 years of his career. And my returns legitimately make me one of the best stock pickers in the world over the last 9 years. So I know what I'm talking about a little bit. Again, take this with a grain of salt though, because you should always do your own research and you should always rely on your own analysis. Okay, again, hate doing that, have to do it. So today we're going to analyze Gratomic. Again, hopefully I'm pronouncing that right. I have to say this again. I forgot to send a disclaimer. I purposely, because I got several questions about this in the last video saying I should have done my research before I look at the company. I purposely do the research this way. This is the exact process I follow. This is the process that allowed me to evaluate 3,943 stocks in 73 countries in only 40 days last year this time when the COVID crash happened. This process works for me. Again, I'm not saying it's going to work for you, but it works for me because it eliminates the companies that don't meet my thresholds first, so I can spend more time evaluating companies that do. Again, having said that, I purposely do not do research like most people do until later. I go through this screen, which is I call the visual preliminary analysis checklist. I go through the full written checklist on my computer, and then if things pass those two screens, then I dig into the financial statements, then I dig into the story and stuff like that. But unless something reaches that threshold, I don't look further because again, I don't want to waste my time on something that doesn't meet my minimum criteria. So the reason I said that is because again, I got a bunch of questions actually about why I didn't do normal quote unquote research until afterwards. I do this purposely, so I'm not biased by that information like the story and anything a company insider has to say, stuff like that. So Gratomic, stock ticker CBULF. Go back to my video on what was it? I'm looking at my other screen over here. Which ticker was it? On Nouveau Monde, and that should be linked below this in the description, to understand the difference between the F ending ADR and the Y ending ADR, because there are important differences. Okay, forward P 0, price of sales 0. I'm assuming their sales are pretty close to 0, or their P and their earnings are pretty much 0. Can't say I've ever seen a beta that low. I never pay attention to beta, but can't say I've ever seen a beta negative 34,000, almost started negative 35,000. That's insane. Okay, junior exploration company, primarily engaged in acquisition and exploration of exploration, redundancy, and exploration and evaluation of assets located primarily in Canada and Namibia. Okay, so they're a miner like Nouveau Monde, which I'm assuming why Jeff D wanted me to look at them. Oh, okay. So, like with Nouveau Monde, there's not much info here. Actually, they have even less info than Nouveau Monde. I think, if memory serves me right, Nouveau Monde had about $8 million in revenue. And this company has 0, and it's a $160.3 million company, 0 revenue, which is going to make this analysis pretty much useless, frankly, because I can guarantee negative huge ROICs. It's going to have either no numbers or hugely negative numbers, and again, at the preliminary analysis place that I look at here, it has to have numbers. Let's go check out the balance sheet. Got a relatively clean balance sheet, but again, $10 million in total assets, about $2 million in total liabilities for a $160 million company. That's not enough info to go on for me in any way. I'm assuming there's no valuation here, correct? Because they don't have any earnings, cash flow, nothing. So this is a short analysis. So what I'm going to do here is I'm going to bring my face back. I'm going to ask you guys the questions that Jeff D asked me on YouTube, or told to me on YouTube, in a comparison to Gratomic to Nouveau Monde. I'm going to read these word for word because, again, unless something meets my minimum thresholds, which this company does not, I don't research it further. So I'm going to put this to you guys and see your thoughts. I'd love to see your thoughts in the comments. Some of the other people that commented on the Nouveau Monde video might have some other comments as well. Number one, Gratomic is producing in 2 weeks and Nouveau Monde is producing in 2 years. That's his first point of why his thesis is Gratomic is better than Nouveau Monde, by the way. Gratomic has 2 mines in Quebec with better starting CGs and owns African mine with the purest graphite in the world. Gratomic is debt-free with $7.2 million in the bank, and Nouveau Monde is in debt and has to raise $350 million, and they are taking about a 1-to-10 reverse share split scenario, which won't be pretty. Again, I'm reading these word for words. Number 4, Gratomic has a starting CG percentage of 40%, and Nouveau Monde has a starting percentage of 4%, so Gratomic doesn't need to use chemicals to make it 99% pure, and will save a lot of money and is great for the environment. Gratomic is mining in Africa with great weather all year long, where Nouveau Monde has harsh winters and will have to deal with big snowfalls and frost. That's a little bit confusing, Jeff D, I have to say, because didn't you say that they have some... Yes, up above in point 2, Gratomic has 2 mines in Quebec. So they'll have to deal with the same things. Yes, their African mines won't, but their other mines will. So that's a bit confusing. Gratomic is mining with regular machines, where Nouveau Monde is mining with an all-electric fleet, which is expensive and unproven. I would say that might be more appealing in long run for carbon footprint, but Gratomic is greener on how they produce. 7. Employees have left Nouveau Monde and came to Gratomic because they see a better opportunity in Gratomic. That has to say something. Point 8, and the last point, Gratomic has tighter float share count in parentheses, which means when we get news, there is less stock to sell. There is less stock to sell and will go up quicker. What are your thoughts on all this? YouTube, what are your thoughts on all this? Do you have any pushback on his comments on Gratomic versus Nouveau Monde? I had mine, but again, most of this stuff is related to story and stuff in the future, which, again, I do not care about until far later in the evaluation. So I'd love to hear your guys' thoughts on this, especially some of the people who were having conversations with me about Nouveau Monde and saying essentially I was wrong about Nouveau Monde. And again, like I told them, I hope I'm wrong about Gratomic. I hope I'm wrong about Nouveau Monde. But both are highly speculative. They are both producing pretty much near zero revenue, and stuff is happening in the future. For my investors, I can't invest in pure speculative stocks like this. So that's where my analysis ends for Gratomic and Nouveau Monde. Again, I'd love to hear your thoughts. If you have any on Gratomic versus Nouveau Monde and the speculative miner stuff, again, and I told this in the Nouveau Monde stuff, I've invested in speculative miner stocks in the past. I lost money, quite a bit of money on them. So I stay away from them. And again, the reason being, and I go into more detail on this in the Nouveau Monde video, is just based on kind of percentages over time. 6-ish out of 10 of these kind of speculative miners will do okay. 1 out of 10 will skyrocket and go straight up, and 2 or 3 out of 10 will go bankrupt. Now the percentage will vary some there, but those are kind of the general percentages. So to me, investing in these kind of companies is more like playing the lottery, except playing the lottery, you say 5, 10, 20 bucks. This is however much investment money you put into it, and let's say 10,000. So essentially, you're playing the lottery with $10,000, in my opinion. Again, I hope I'm wrong. I hope all these companies, as I said in the other videos in the comments, I don't short sell ever. So I don't short any stock I talk negatively about. I don't have a long position in any stock I talk positively about. So I want all these companies to succeed. I don't want any companies to fail. I'm an eternal optimist. But when it comes to my investment and the portfolios I manage, I can't take risks like this. And this is insanely risky. Even though, again, the EV stuff with the graphite, some of the other stuff I've talked about, like solar and biofuels, it's all coming. I understand it's coming. But I don't want to be around and investing in something until it's kind of more proven, because I don't want to be involved in the blow-ups. So, I hope this helped. I hope you found this interesting. If I didn't explain something well enough in the comments, or let me know in the comments below. If I missed something, let me know in the comments below. Make sure you watch the full context of the video, because again, some people did not in the last video, and yeah, we had some conversation about that. So, not a big deal. I appreciate everybody watching the videos and commenting. So, if I missed something, let me know in the comments below. If you'd like me to make a video like this, let me know in the comments below. The last 10, 15, 20 videos I've made, and the next 20 or 30 I'm going to make, are 100% from YouTube viewers commenting on our videos. So if you want me to evaluate a stock anywhere in the world, let me know. The only companies I will not evaluate are banks, because I don't evaluate them, and insurance companies, because you actually have to dig into the 10Ks and the annual reports to be able to evaluate them. Other than that, let me know a stock anywhere in the world, and I'll look at it for you and make a video for you, like I've done here for Jeff D. Jeff D, thank you, by the way, for requesting this video. I hope everybody else has liked it, and learned some other stuff from it. If you're listening, or if you're watching on YouTube, make sure to like, love, share, subscribe, all that good stuff, and hit the notification bell so you're notified every time I release a new video, and release new videos all the time. If you're listening on the podcast, and make sure to do all that same stuff. but also leave a review. We'd really appreciate a review, because the more reviews, views, and listens we get to our content, the more people we can help. If you yourself are looking for more specific help on how to become a better investor faster, check out our free resources at the link below. You can get our 5 free gifts, which has the full written template of this visual preliminary analysis checklist that we're doing. You can get the actual written copy for free. You can get a free PDF copy of my book, How to Value Invest. You can also get a free PDF guide, or free PDF of our guide, 7 tips to picking great stocks and 3 times you must sell. You can get all 3 of those for free at the links below. If you're looking for more specific information or specific help from me on how to become a better investor faster, make sure to check out the information for our masterclass below. But until next time, have a great day. Talk soon. Bye.